How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 within my Vanguard brokerage account. Now, I am sure I do not need to update all of you a whole bunch on where exactly the market is at. I mean, we have been bleeding red since last week. My account is well below $2,000 since my last video, leaving my account currently sitting at $80,196.21. Now, I'm not panicked because I understand that this is all about the long game. As a long-term investor, I'm going to be able to double down on high quality positions like the three I'm about to talk about in today's video and just kick back and relax well into the future, knowing that these three companies are most likely just going to deliver through on a solid ROI. Now, there are many more out there, but I'm giving you the account update and what I've been adding to my portfolio, a video you're not going to want to miss out on. Watch it through and through. And of course, before we dive in, tap on that thumbs up button as it greatly helps me grow the Blue Lion Finance channel. And if you yourself personally have not already subscribed, go ahead, tap on that subscribe button while you're at it. I'd love to have you on this journey with me. Now, YouTube, let's go ahead and dive right in. Okay, so before I go any further into today's video and share with you the three stocks that I've been doubling down on last week and am most likely just going to be buying more shares of this week while the market is in red, I want to share with you all what exactly, in my opinion, is going on. And of course, you all know that the new variant is out there and spooking a ton of investors. A lot of people are full of fear and uncertainty in terms of where the market is heading. And that is truthfully totally acceptable at this point in time because even I myself have no idea where the market is going.
I know exactly what you mean. Every newsman in this city's laughing at us, and I don't like it.
But I do know one thing, and that is when I look into the future, and I'm no Nostradamus here, but when I look into the future, I can certainly tell you that in 2 or 3 or 5 years, we're most likely going to be better off in terms of where we're at in the market value than where we are today. So as a long-term investor, that is all I want to be doing, is doubling down on high quality stock positions and just holding on. Of course, we have headlines in the news like the stock market is about to drop by 50%. And while that certainly may be true, that is exactly why I'm not YOLOing and throwing all of my money into the market right now. I'm throwing a little bit in here and there, dollar cost averaging my way into my positions in which I think are going to do very well. So with that being said, I want to go ahead and talk about the very first company that I picked up another share of last week. That company is Medtronic, ticker symbol MDT. It is a medical device company that has been revolutionizing the entire healthcare industry since its founding back in 1949. Now, when it comes to Medtronic, this is really what I would consider an under the radar, low flying dividend stock you can invest into. And it doesn't really get a whole lot of hype, at least in my opinion, for what it should be getting. But honestly, this is the exact type of company that I want to be doubling down on. We're talking about a company that is nearly a dividend king with 44 consecutive years worth of dividend payments. This is a very reliable, safe bet. And of course, right now it is truly undervalued. I want to get into that in a second. But what I first want to talk about is why exactly it is so beaten down in comparison to the rest of the market. Because yes, while the entire market is currently volatile, we're talking about a company that is beaten down because they had a miss on their earnings. And we're also talking about a company that has just been beaten down based off the fact that a lot of these surgeries, these elective surgeries over the past couple of years have been pushed aside. Medtronic is a medical device company, and so go figure, their sales are not coming in as strong. However, it's key to note that Medtronic was the leader in ventilator manufacturing throughout 2020, delivering through on 1/3 of all of America's ventilators. Now, that is a pretty strong number and a company that I would truly want to get behind. After all, if America is trusting Medtronic to deliver through on it, I, as an investor, certainly want to be trusting Medtronic to do the very same for my own portfolio. Now, in terms of the numbers here, I want to take a look at where Medtronic was just a couple of months ago. We're talking about a company that was trading for over $130 per share, and it is currently now around $106 per share. That is about a 26% dip. That, my friends, is a beautiful discount for all of us to pick up Medtronic while it is on sale. Now, last week I picked up that share for $110 because mentioned, it's currently trading for around $106. Now, analysts certainly believe that Medtronic is not only going to recover, but it is going to surge right past those record highs of theirs from a few months ago, coming in at a median stock share price of $143 per share, a high stock share price of $155 per share. And as a dividend investor, I'm collecting on that dividend of Medtronic's. It's coming in at a current dividend yield of 2.39%. Now, not exactly in my sweet spot, which is around 3.5 to 4%, but certainly a company that I can rely on as a dividend investor. Currently, after buying this last share, I have 16 total shares within my portfolio and have a goal to get to 25 total shares of Medtronic as my next milestone. Now, the next two stocks I'm going to talk about are REITs, real estate investment trusts. They are nothing new to the Blue Lion Finance channel. You've heard me speak about them before, but I owe it all to you guys to just be transparent in sharing what I'm buying, when I'm buying them, when I'm selling. So with that being said, the first one is Realty Income, ticker symbol O. Realty Income was a REIT that was founded back in 1969, has done a fabulous job of growing a very well-diversified portfolio. They have grown from 0 to 7,000 plus properties spanning across the United States, all 50 states, and then some here going into Spain, the United Kingdom, as well as Puerto Rico. So heavy diversification. Now, as a monthly dividend payer, this is a beautiful REIT to get invested into, and it has certainly established itself well as a dividend aristocrat with over 25 consecutive years of dividend payments and increases. Most importantly to understand when it comes to Realty Income is they are not done growing. They have a pretty aggressive plan to just continue to grow, and they aim to become a top 5 global REIT. So after a very successful merger of theirs with VEREIT and then a spinoff of Orion Office REIT, Realty Income is just poised to do exceptionally well. Now, last week I went ahead just to pick up one more share of Realty Income for $69.66. However, since I last purchased that share, it dropped even then some to $67 per share. It is just getting sweeter. Now, after buying this share, I currently held a total of 68 shares worth of Realty Income, have a milestone to get to of 100 total shares before really moving on to this second REIT I'm about to talk about. More on that in a second. As of right now, I want to share with you that analysts only have those expectations that Realty Income is going to jump to at least a median share price of around $79.20 and a high stock share price of $87 per share. Now, again, as dividend investors, we're here for this dividend. Realty Income has a very beautiful dividend yield coming in at 4.48%, and I only foresee, given the expansion ahead of Realty Income, that their dividend will also continue to grow. And last but not least, REIT number 2 being Stag Industrial, ticker symbol STAG. Now, Stag Industrial was founded back in 2011. It is not as old of a REIT as Realty Income, but surely a REIT that has a lot of firepower behind it. It is myopically focused on the acquisition and operations of commercial spaces that you and I aren't typically thinking about. And I'm talking about within the industrial segment of real estate, so warehouses and distribution centers. Now, we got to think about their list of tenants, with Amazon being their top tenant, and then FedEx and Costco, Ford. This list goes on and on with companies that need large warehouses and are going to need them well into the future, especially just thinking about where we're heading in terms of e-commerce. Well, this type of REIT is the exact type of REIT that you're going to want to get into. Now, I can't necessarily tell you that the volatility in the market has disrupted or beaten down Stag Industrial stock share price. I consider it to be right now fair value, but what I certainly can tell you is that just getting into this position while they're currently building up that portfolio of theirs is going to be very lucrative for you as an investor. At current, they have 517 properties spanning across 40 states. Now, analysts only have expectations that Stag Industrial is going to continue to grow, coming in at a median stock share price of $47.50, high stock share price of $54 per share. I went ahead last week to just pick up another share worth of Stag Industrial for $43.29, bring my total share count of Stag Industrial to 6 total shares. It is another monthly dividend payer, but again, I am focused right now on building that Realty Income position to 100 shares before moving on to Stag Industrial, but want to take advantage of Stag at its current prices. Now, their current dividend yield is sitting at 3.35%, so just another exceptional play when we're talking about REITs. And of course, during these high inflationary periods, REITs or real estate is exactly where you want to get invested. Now, YouTube, that is it. If you've liked what you heard, you learned something new, you yourself may get invested into these companies. Comment below, but always make sure you do your own due diligence. I'm by no means a financial advisor. Before we go ahead and close out the video, tap on that thumbs up button to help me grow this channel. And if you haven't done so by this point, tap on that subscribe button while you're at it. I'd love to have you along for this ride with me. Now, YouTube, until the next video, I will see you all there.